More hardship expected for the JSE and the local currency, with global markets down again after losses on the U.S. markets overnight. The Fed is widely expected to hike interest rates by 75 basis points as it tries to tame the high inflation which has subdued the global markets for months now. Jimmy Moyaha is independent analyst and joins us now for some analysis of how the JSE is likely to perform in early trade. Jimmy, let's start with the currency. 17 Rand 74 cents against the dollar and counting. Give us all the scenarios of how the local currency is expected to fare by the end of the week and maybe the end of September.
Morning, Tuli. Morning to our viewers. 1773 is where we're sitting at the moment. We tapped 1781 yesterday. We've almost tapped 1780 this morning, again 1779 or so. A couple of likely scenarios that we're looking at. We could potentially see the Rand edge closer to that 18 Rand level, possibly breach 18. It might not sustain at that level. We are anticipating that the interest rate decision out of the US and out of South Africa tomorrow would have an effect on the Rand. Whether or not the dollar strengthens more relative to the Rand remains to be seen. I think that's going to be part of the inflationary conversation when we look at South Africa's inflation. But possibilities, I mean, we could very well remain range bound between sort of 18 Rand and possibly 17.50 or even down to 17 Rand. It's highly unlikely that we'll come back down towards 16.50. If we do come below 17, we'd probably sort of sit around 16.80 as a first point of interest to see if we can break through that level. So all eyes at the moment are going to be on the Fed today and what we get from the Fed. We do, of course, know we've got our CPI figure coming out now at 10 o'clock. That will have a bearing on what we perceive our SARB might do tomorrow in their rates conversation. But by all accounts, at the moment, we're sitting above 17 Rand and we're likely to hold above 17 Rand for the foreseeable future, possibly towards the end of September.
Sure. Let me pick up on that CPI numbers. South Africa's headline inflation numbers coming out today. This is ahead of the MPC decision on Thursday. What are the chances of a slowing number and maybe a hold in interest rate increases? Wishful thinking?
At this point, it might be a bit wishful thinking. I think if we look at the factors driving the decision and the conversation, particularly from an inflationary standpoint, a lot of South Africa's core CPI has been quite steady, sitting at 4.6%, which is effectively the inflation figure stripped out with food and energy prices stripped out of that. And we have seen a slowdown in the energy price space. We have seen a bit of reprieve on the oil front. We might see that filter through into the overall inflation number. We're expecting that inflation might come in at 7.5%, which is less than the 7.8% print we saw in the last reading. So we might see a bit of a slowdown there. But whether or not that slowdown will be significant enough to drive a hold on the rates, I doubt it, given that we are pricing in at this stage about 0.75% or about 75 basis points in South Africa's rate hike. So if we do get reprieve, it might potentially be sort of to say 0.5% hike instead of 0.75%, but very unlikely that we'll get a complete hold on the rates decision, because the SARB still wants to ensure that the inflation figure comes back below that 6% inflation targeted ceiling that they've got in place. So unlikely we'll see a hold, but we might, if we're really hopeful at this stage, see a smaller than expected hike. But again, that might be dependent on what we get out of the US. If the US provides a more aggressive rate hike and a more hawkish stance on their side, we might see that we might follow suit in South Africa, keep the rates where they are.
Let's quickly touch on company news. York Timber publishing its financial results for the year, which ended on the 30th of June 2022. How have they fared?
They didn't fare too well. They released a statement around the 20th of September last week, around the expectations we could see from their results. They released results this morning, and revenue was down about 5%. Earnings per share, headline earnings per share down about 78%. We saw net working capital was up. That was a slight positive for them, but their asset value was down about 2%. They did manage to reduce their debt by some 133 million, but by all accounts, not a very good year for them. They did outline, of course, back in May that they are expecting to have a bit of a rough year off the back of the metals workers strikes that they were subject to earlier in the year, as well as, of course, we know the inflationary pressures that have been gripping a lot of our production and manufacturing space companies in this time. So not the best set of results for them, but they are, of course, one of our oldest standing companies on the JSE. They've been on there for over 70 years. We hope that going into this new financial year that they make a couple of changes in line with the reduction in debt and the increase in working capital to see if they can achieve higher production levels.
Let's conclude with Goldfields, which seems confident that investors will back their $7 billion Yanama deal. Talk us through the pros and cons of this particular arrangement.
Well, for Goldfields, this is certainly a big positive if they're able to get the deal through. I mean, they have been wanting to expand into the Americas for quite some time, and Yamana, as a Canadian company, has got assets sitting in Brazil, Chile, Canada as well, and that would represent quite a good expansion opportunity for Goldfields. They have been seeing some constrained market activity locally, of course, so expanding into new territories is always going to be a good thing for them. The downside, of course, I mean, we know from a strategic point of view that's going to require additional resources. Goldfields had initially already said that they're looking to pay about a 30% or 34% premium to acquire Yamana, and whether or not that was a significant premium or whether or not that was received well by shareholders remains to be seen. They've said that they haven't seen a mass exodus from some of their large shareholders, which gives them the inclination that they are supporting this. We do know, of course, that BlackRock and the PIC are some of the largest shareholders in Goldfields, and so their silence on the matter or their view on the matter is going to be perceived as whether or not Goldfields has the backing of their investors. They do, of course, need Goldfields, that is, they need 75% of the shareholders to vote for the deal to go ahead. But their CEO has obviously come out to say that it's not the end of the world if the deal doesn't go through. They are confident it'll go through, but if it doesn't, it's not the end of the world for them. We know that Goldfields already has got other assets outside of South Africa's borders. They've got assets within Ghana and Australia as well. So this expansion for them is a strategic one given the markets that they want to tap into. And it just remains to be seen. I think the vote that we are expecting will happen around mid-November. So the deal will be tabled around mid-October, and then the vote will happen around mid-November. So we'll have to wait until the end of the year to see if that does go through.
Jimmy Moyaha, thank you very much for that markets update.